monetary and liquidity conditions, it has been decided to gradually restore the CRR in two phases in a non-disruptive manner to 3.5% effective from March 27th and 4% effective from May 22nd, 2021. As mentioned earlier, the CRR normalization opens up space for a variety of market operations of the RBI to inject additional liquidity. The next measure relates to marginal standing facility MSF extension of the relaxation. On March 27th last year, banks were allowed to avail of funds under the marginal standing facility MSF by dipping into statutory liquidity ratio up to an additional 1% of net time and demand liabilities. This facility, which was extended in phases up to 31st March 2021, that is coming 31st March, will now be available for a further period of another 6 months, that is up to September 30th 2021, to provide comfort to banks on their liquidity requirements. This dispensation provides increased access to funds to the extent of rupees 1.53 lakh crores. The next set of announcements relate to regulation and supervision, and the first one relates to SLR holdings in held to maturity category, that is in HTM category. In order to provide certainty to market participants in the context of the borrowing program of the center and states for 21-22, it has now been decided to extend the dispensation of enhanced HTM of 22% up to March 31st, 2023. to include securities acquired between 1st April 21 and 31st March 22. The HTM limits would be restored from 22% to 19.5% in a phased manner starting from the quarter ending 30th June 2023. It is expected that banks will be able to plan their investments in SLR securities in an optimal manner with a clear glide path for restoration of HTL limits. Credit to MSME entrepreneurs. In order to incentivize new credit flow to MSME borrowers, scheduled commercial banks will be allowed to deduct credit disbursed to new MSME borrowers from their NDTL for calculation of CRR. For the purpose of this exemption, new MSME borrowers would be those who have not availed any credit facilities from the banking system as on 1st January 21. This exemption will be available for exposures up to rupees 25 lakh per borrower for credit extended up to the fortnight ending October 1st, 21. Details of the scheme would be spelled out in the circular. Capital conservation buffer and net stable funding ratio, that is CCB and NSFR. The emphasis of regulatory interventions by the Reserve Bank has veered towards supporting and nurturing the recovery. It has therefore been decided to defer the implementation of the last tranche of capital conservation buffer of 0.625% and also defer the implementation of the net stable funding ratio by another 6 months from 1st April to October 1st, 21. Review of regulatory framework for microfinance. Microfinance sector plays an important role in the last mile delivery of credit to the needy segments. In view of the evolving role of the sector and the need for a robust framework for enhanced delivery of last mile credit and strengthening consumer protection, the Reserve Bank will come out with a consultative document harmonizing regulatory frameworks applicable to various regulated lenders in the microfinance space. Next announcement relates to Expert Committee on Primary Urban Cooperative Banks, that is UCBs. The urban cooperative banks, I am referring to primary urban cooperative banks, are an important segment of the credit structure of our country. The Reserve Bank has undertaken several measures in the recent past to strengthen the urban cooperative banking sector and deepen financial inclusion. The recent amendments to the Banking Regulation Act 1949 have brought near parity in regulatory and supervisory powers between urban cooperative banks and commercial banks, including those related to governance, audit and resolution. An expert committee will be constituted to provide a medium-term roadmap for strengthening the sector. leveraging on the legislative amendments. Constitution of this expert committee and its terms of reference will be announced shortly. The next announcement relates to remittances to the IFSC under liberalized remittance scheme, LRS. Currently, resident individuals are not allowed to make remittances under the liberalized remittance scheme, LRS, to international financial service centers, IFSCs. To further develop IFSCs and bring them at par with other international financial centers, it is proposed to permit resident individuals to make remittances to IFSCs for investment in securities issued by non-resident entities in IFSCs. For this specific purpose, resident individuals should be allowed to open a non-interest bearing foreign currency account, FCA, in the IFSCs. The next set of announcements relate to deepening of financial markets. And the first measure in this context is allowing retail investors to open gilt accounts with RBI, and this is a major step. The central government and the Reserve Bank have taken several measures to encourage retail investment in government securities. In continuation of these efforts, it is proposed to provide retail investors with online access to government securities market, both primary and secondary, directly through the Reserve Bank, and we are calling it Retail Direct. This will broaden the investor base and provide retail investors with enhanced access to participate in the government securities market. This is a major structural reform, placing India amongst select few countries which have similar facilities. It has to be noted that retail investors will have now direct access to participate in the GSEC market, both primary and secondary, and directly they can open an account with the Reserve Bank. And this kind of direct access which is being given to the retail investors in GSEC market, I think very few countries in the world have it, and India now joins that league. This is a major structural reform which the RBI has decided to implement, and the roadmap for this will be announced separately. This measure, it is important to note, I repeat, this measure together with the HTM relaxation will facilitate smooth completion of the government borrowing program in the financial year 21-22. The next measure relates to foreign portfolio investors' investment in defaulted bonds. In order to further promote investment by foreign portfolio investors, that is FPIs in corporate bonds, FPI investment in defaulted corporate bonds will be exempted from the short-term limit and medium-term residual maturity requirement under the medium-term framework. The next set of announcements relate to payment and settlement systems. With enhanced penetration and efficiency of digital payments, major payment system operators would be required to facilitate setting up of a centralized industry-wide 24/7 helpline for addressing customer queries in respect of various digital payment products and give information on available grievance redress mechanisms. Going forward, the facility of redress of customer grievances through the helpline shall be considered. This is envisaged to enhance consumer trust and confidence in the digital payments ecosystem. Guidelines on outsourcing for operators and participants of authorized payment systems, and this is the next measure I am going to announce. The resilience of the digital payments ecosystem to operational risks needs to be constantly upgraded. A potential area of operational risk is associated with outsourcing by payment system operators and participants of authorized payment systems. To manage the attendant risks in outsourcing and ensure that a code of conduct is adhered to while outsourcing payment and settlement related services, the Reserve Bank shall issue guidelines on outsourcing of such services by these entities. Check truncation system, that is CTS clearing across all banks. The coverage of the check truncation system CTS has been extended to all legacy clearing houses by September 2020. It is however noticed that about 18,000 bank branches are still outside any formal clearing arrangement. It is now proposed to bring all these branches under CTS clearing by September 21, With this measure, all bank branches in the country would be covered under the CTS. This will enhance customer convenience and bring in operational efficiency to paper-based clearing system. And the final announcement relates to consumer protection. And here we are going to announce an integrated ombudsman scheme. At present, the framework for alternate dispute resolution consists of 3 separate ombudsman schemes for banks, NBFCs and non-bank prepaid issuers. These 3 schemes are operated by the RBI from 22 ombudsman offices located across the country. To make the ombudsman mechanism simpler, efficient and more responsive, it has been decided to integrate the 3 ombudsman schemes and introduce centralized processing of grievances following a one nation, one ombudsman approach. This is intended to make the process of redress of grievances easier by enabling the customers to register their complaints under the integrated scheme with one centralized reference point. The integrated ombudsman scheme will be rolled out in June 21. And finally, let me conclude by saying that going forward, and this is the concluding paragraph, and I would like to sort of thereafter we have a press conference which is coming up at 12 o'clock, and that will be also live streamed on the RBI YouTube channel. In conclusion, I would like to say that going forward, the Indian economy is poised to move in only one direction, and that is upwards. It is our strong conviction, backed by forecasts, that in 21-22 we would undo the damage that COVID-19 has inflicted on the economy. After the chaos and despair of the year gone by, through which we have sailed together and shall continue to sail ahead, the overall situation can best be described in the words of Mahatma Gandhi, and I quote, "We are daily witnessing the phenomenon of the impossible of yesterday becoming the possible of today." Thank you. Stay safe, stay well. Namaskar.